So in this video, we're going to talk about a crucial aspect of investment, which is fundamental analysis. We've talked in the initial videos about the dichotomy between the analytical tools. So we've got two analytical tools. One is called fundamental analysis, other is technical analysis. And now we have moved away from trading to the world of investment. I think it fits that we talk about fundamental analysis. Now, as the term suggests, this is an analysis into the fundamentals of the company, right? That derive the value of the company. And the reason is very clear. We want to understand and decipher whether this company would be around in the long term, because we want to invest in the long term, but also what are the opportunities that this company gives us as an investor, right? So that's the place. It's an broad umbrella term. Underneath comes so many things, but we can start from the functional side of the company. So functionally, it relies on the numbers of the company, that the company is putting out, accounting numbers. It also relies on qualitative stuff like the corporate governance, right? What kind of people run the company, who controls the company, who is owning the company, right? Those are the basic questions we ask. And then within the structure, are there any inherent conflict of interest that we find, right? And there are other aspects of it also. The strategy, the long-term strategy, the marketing, and all those functional things would be part of the fundamental analysis, right? Anything that helps us to understand where this company is heading in the future, right? What the growth trajectory looks like. So let's get our hands dirty and try to find with some aspect. All right, so the thing I want to, since I realize Apple has taken their crown back, they become the most important company. So let's look at the fundamental information of Apple and try to make sense of it, right? If we can. So we go to Apple. Yahoo Finance is the easiest place, actually. It has a very, very easy to follow user interface. So the summary that you get on Yahoo Finance is where we want to start with, right? We want to look at what these things, so previous close, open, bid, ask, days range, 52-week range, volume, and average volume. So the things that you have on the summary on the left side, they are essentially important if you're trading. And the things on the right side, that's the beauty of it, right? It's quite nicely on the things on the right side of the summary are essentially things that you think tell you about the fundamentals of the company, right? But some of it, like EPS, could be used for trading, earnings per share. So let's start with the market cap. Market cap is the size of the company, right? So Apple will be the first company, I am assuming in a very short period of time, it will cross the 3 trillion mark. So that's the total value. Market cap is the multiplication between the stock price, which is here, $175 per share, multiplied by the total number of shares outstanding, which is what the number of stocks that the company has offered in its successive offerings that can be bought and sold. So let's understand where that we can find that statistics, and it's right underneath this tab called statistics. If you go down on the statistics, what you get this shares outstanding, right? This is the number. So if you multiply 16.41 billion with the 175.08, which is the price at the top, right? So if you multiply these two numbers, you should be able to get the market capitalization, right? So that's where it comes from. It's the total size of the equity, right? So if somebody were to buy the total equity of the company, 100%, that this is the amount that you are supposed to pay. But this is not the price of the company. Company may be valued higher than the market capitalization, right? So that's like basics. We are talking about the basics. How so? If a company has a lot on its book in terms of debt, then all that debt would be priced for the buyer. If I'm buying it, I'm also taking ownership of that debt that the company holds. So in order to come up with the exact amount, I will be adding that debt, the total long-term debt that the company holds, along with the market capitalization. And I would deduct, if the company holds a lot of cash on its balance sheet, then I'll deduct it, because by owning that company, I will also get that cash. And therefore, my actual price of that company would be less by that amount that the company holds in terms of cash, right? So the value of the company is coming from a formula called, or a concept called enterprise value. Enterprise value includes three things. As I said, market capitalization plus total debt minus cash. So that's the value part, right? We're getting the simplest definition based on the market prices, but there are other ways to look at value, because as I said earlier, the objective of fundamental analysis is to come and discover the value that the company offers. And remember, this price 175 is not reflective of the value that this company truly possesses. Maybe it's because price tend to be random. It depends on the collective wisdom of all the investors in the market, and it may not actually fully capture sometimes the future growth prospects. But we know Apple has been on a tear, and that's where the fundamental analysis shifts from the numbers to the qualitative aspects of as to what is driving this whole craze. We can look at the price chart. I think that's something that we do when we are trading, but we are also looking at it when we are thinking of investing, right? Now, what you see is, if you go to the maximum time frame, you will realize the recent time. And what you see is, this is 2020, right? 2020, this whole rise, right? So it used to be 2019, 2018, it was $50, $60, $70 was where the share was. It has gone up around 175, and it was, yeah. So this is historic high. Now the question one will have to ask, and talking about the catalyst, which we used in terms of, we are never away from that catalyst. Anytime we are looking at price, we want to figure out why it is moving. Maybe in investment, we are looking for the long-term catalyst as opposed to a short-term catalyst. That was our focus in the trading system mechanism, right? So what is the long-term catalyst? Why is this company is driving the way it is driving? Microsoft has, I mean, they're playing back and forth, but I think Apple would actually maintain their lead as the largest company on the planet for quite some time. And the reason for that is, right now, what's happening is people, especially the middle class, upper middle class, they have not been traveling. So all the amount that people would typically spend on services like traveling, tourism, all that money is lying around. And that's what has allowed people to actually switch that whole expenditure towards gadgets. And Apple is one of the biggest beneficiaries. So a lot of people have started to buy, they started to refresh their products, buy newer brand. So that's why you see the sales that's going through the roof for a company like Apple, and that reflects in their share price. Now, the second term that you have here on the summary, let's come back to that, beta. And it says 5-year monthly beta. What is beta? Beta tells us about the risk that this company has. Now, this is a very cursory number. It's a number that you can see, and that comes in so many different variants and flavors that you have to understand what it is, right? So beta is the relative risk of the stock vis-a-vis the rest of the market. So if you're talking about an American company, Apple here is an American company, this beta is reflecting the risk of Apple vis-a-vis the entire US market, stock market, all the big companies in the US market, which is reflected by the S&P 500, right? The top 500 companies that form part of that stock index. So relatively, this is a relative risk measure, beta. 1.2, what it means? It means 1 is the average risk of the entire market of any country, right? So we're talking about US, 1 being the average. it's 1.2, which means it's slightly more riskier than the average risk of the market. Now, is it a cause of concern? Not really. The higher the risk that beta shows, it also is correlated with the return. Now, this company has been growing phenomenally. So the company that grows so fast, they tend to have higher beta. But I won't really call 1.2 as high. It's very close to the average. As opposed to that, let's look at another company, which let's say again, Takeda, which is a Japanese company listed in Japan. And you can see it's close to 1. Maybe we can look at some other Japanese company, maybe Sony. Let's say where the Sony is. We'll try to get sense of this beta. And you can see Sony Corporation has a beta much less than 1. It's almost close to half, which means in the Japanese market, and this is a company that's listed in Japan, they also have listing in US. And so because this company operates in Japan and globally, it's a multinational, but their headquarters is in Japan, you can argue that as compared to other Japanese companies, it is less risky. Or even if you're comparing it with US stock exchange, that's also possible because they do have a listing, dual listing. One listing is in New York Stock Exchange. So what it tells you, it's less risky, but it also tells you the prospect of growth, which is this company may not, because risk return, they go in tandem. So companies that are low beta, generally, they tend to have low growth prospect. Not always. And that's what we as investors are looking for. Sometimes they're low beta, but the company is growing fast. That anomaly, if we can discover it, that gives us a home run, so to say, right? So let's go back to Apple, because that's, yeah, it's an interesting company to analyze. Anyway, so that's beta, it's the risk. It also shows that this company is slightly more risky, but it's also growing really fast. That's what you can take away, understanding anecdotally from the market, right? And news and those kind of things. So we always try to see these numbers in the light of what we see outside, right, in the market. Next up is PE ratio, and I want to spend some time describing it. PE ratio and EPS, they are interconnected. These are two concepts that would take a little bit of explaining. I would like to do that in the next video. And the rest that you have at the bottom, like earnings date, this is on the schedule when the companies announce their earnings. So earnings report, that's the date. So it's a duration. In this case, it's a window of 6-7 days, which the companies have on their calendar. And they choose one of these dates when the CFO comes out and tells about what the company's performance was in terms of profits, right? So earnings are profits. More specifically, it's so if we were to look at the financials, I'll show you where that, and if you're looking at the income statement, we want to expand it all. And if you go down, you get this net income. Now this net income from continuing operation, this net income is what it's here from continuing operations. So this net income down here is what is the earnings are, right? And you do find also this, this chart on Yahoo Finance, and it covers what their performance has been in the previous iteration when the earnings were announced. And so you see it here. I'm going to explain that also. So this is just the date, and then the dividends, how much investors made in terms of dividend from this company, and when did they offer that dividend. So ex-dividend date is the date when the dividend comes into effect, which means if I'm owning that stock, I received that dividend already. So if I sell my stock after ex-dividend or on or after ex-dividend date, then the owner, the person who's going to buy from me that stock, would not receive dividend, right? It's already gone. It's an important date. I'll explain why it is important at some other in my next videos. So this is the first part that I wanted to explain. Just basically briefly start the conversation about fundamental analysis. Now I'm going to put within this week, I'm going to put one Excel sheet on which I would be soliciting your experience with the game, and also the strategy or any questions that you have about the game. You would be writing that, and it's a graded assignment. So I'm giving you a heads up, and I'm going to see you in my next video. Ciao.